on the site, eh? Jesus. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! We're back in the saddle. Actually, I guess Mr. Mayor is, I think he said he's traveling to South Africa last week. Yeah, he's going to be gone for South Africa for the next little while. I don't see any reference to Thomas here, so I think it's probably just the few of us here. Brian's going to be doing one of his fun solo trips here this morning, and actually we did I think it was like a 2-hour day broiler chicken show yesterday. So I can completely understand that, there's not a heck of a lot new that I can add to a 3-hour daily brief. Oh, great. Here we go. I don't know. I think, considering the holiday coming up here, I think we'd probably make this a little bit, what's the term I'm looking for? I can't even remember. Brief? I don't know. Daily brief? Imagine that. Anyway, good morning, everybody. Let's make sure that I have all the links all in the right place. And Tim, I saw you mention over there on YouTube that this is supposed to be the year of the pig in China. So if you feel like it, while you're sitting here listening to Brian rant, it'd be kind of cool if you could pull up what does the year of the pig imply? Is that a year of bountifulness, or is it another tough slog year? Anyway, as I've said recently to you guys, I think it's you all deserve a big sort of hearty congratulations for getting through 2018. That was a real fucking pain in the ass when it came to crypto, eh? There's not a heck of a lot to do. And, if anything, what it really speaks to in my mind is this kind of concept where the market moves in these, I'd actually say it's pretty predictable cycle so far. So I don't know. Maybe we can lobby TradingView to get another row of 4 charts here, and we lay out what the coming cycle should look like. But all in all, as I sort of talked about in the broiler chicken show yesterday, I still think we're going through this period here. And I think there's got to be like one more final dump here in Bitcoin before we finish this mess. You can almost see the M starting to come in very similar to the way this acted here. So we're almost through the shit. We're getting close. What's really interesting, I noticed on the site, was some people were posting, and I don't know, we're probably not allowed to disseminate this, but I think a relatively new person to this site posted this in the lounge this morning, and I was just reading through it. It seems to me that these market prognosticators, market callers, whatever, I didn't really read through it all. It's like 30 pages, but maybe peruse it. Looks like they're suggesting that the market might be a bit soft here for the next little while. So we might as well, because we didn't really do it in broiler chickens yesterday, we might as well take a look at the broader market and some implications that we're seeing. I do find it interesting that the US dollar index itself is still very soft here. Now we're threatening to lose 38.2s of this particular range. And if that's the case, then we probably have to start thinking about bigger ranges. Can you guys kind of see how that could very easily make a massive fractal here? 38.2, and if we think about that as sort of the neckline, and maybe this is a shoulder, I'm kind of thinking maybe if we lose these levels here, probably thinking somewhere along the lines of like that going forward. So we'll see. Next big objective, interestingly enough, and actually this kind of makes sense. I like it when I draw on these studies and you start seeing confluence of levels. Probably if I go like this. There we go. So first things first, that should jump out at us at the U.S. dollar. There is sort of the primary trend line off of the early 2018 lows. So that's probably going to be a bit of a support line, bit of a magnet for price going forward. You know, Thomas had been talking to us recently about this very sharp, steep trend line that was lost here. And it almost feels like to me that when we lost this trend line in particular off of this head and shoulders level, this line here, actually, we could probably get rid of this stuff. So when we lost this trend line here, that's when the gold sort of woke up in earnest. So a lot of gold bugs must have been watching that event. And the people that, are driving the bus kind of idea. I'm hearing a lot of talk about how the U.S. economy is a bit too weak to be able to sustain further interest rate cuts. And, there was a guy, Art Cashin, I like to follow. Not necessarily follow, but just listen to him. And he's actually postulating that he doesn't see any more interest rate increases for the next little while. So maybe the market is starting to believe that kind of sentiment, and the U.S. dollar index is coming off here on the anticipation that the Fed is basically done. They've said that they want to keep raising rates, and I've talked to you guys recently about what does that higher time frame U.S. dollar bull look like. As it stands right now, you can see this is a rolling top, but we haven't really broken yet. This is still, in my opinion, very short term. And if we go and look at like the currency trends, you can see U.S. dollar index is still trending higher here. This is still just nothing more than a short-term pullback. So we'll see how this goes, but it is interesting to see that the Japanese yen just doesn't have any quit in him right now, and it's actually going to forcing the moving averages to cross back bullish here. I mean, you certainly can't chase this up here. But, I guess the writing's on the walls that this down move has basically played itself out. And, range trader, especially when it comes to things like currencies, I think most of our community would look at this chart, horizontal support and resistance, and say, well, it kind of makes sense. The market coming down into these levels found buying support here. I don't know. I mean, I definitely can see the W here. So, I can understand the trade. I just, I'm not the biggest fan of taking the trades when the moving averages are still bearish like that. But we've seen that happen in a few markets. That's interesting. I think that the gold market is moving very closely with the yen, and sort of in opposite to the U.S. dollar index. So I suppose as long as these things are bullish, we ought to think of short-term pullbacks as sort of buying windows. And interesting how that reload zone is lining up nicely off of the original double bottom here on the weekly charts on the Japanese yen. I'm not quite sure where this is going to top out, but if I was going to be a buyer of yen, probably want to be first hunting first stop targets, and then does this bot out. That would actually be the ideal sort of trend continuation trade. If we just had the market just, politely come back, put in a nice bottom, and away we go. Set up a nice little bot here. And considering that the trend has turned bullish, that would be sort of my short-term expectation or hope. Violent dips against the original double bottom, and just risk against these lows. That's not a terrible idea. But we'll see how this goes. Very, very strong. And we should probably, listen to the writing on the walls. At the same time, too, though, we have to be careful that this is technically the 31st of December. It's the last business day of the month and of the year. and stock settlement. Anybody who's doing tax loss selling had to be done by the 27th. So we're probably going to see a bunch of position squaring and stuff through this first week, and then of course of the new year. Tomorrow, if I'm not mistaken, is a holiday. So I don't know whether we'll do a broiler or a daily brief or not tomorrow, but January 2nd will be sort of the official kickoff for the January barometer. So we should expect to see some fireworks through the end of the week here. But it's very interesting to see this gold market, or excuse me, the yen market. And what I noticed, I mean, we're not getting it on the euro per se. There is this sort of little double bottom that sort of corresponds with this bottom here on the yen. But the moving averages haven't crossed over bullish just yet. We might just roll over here. We'll keep an eye on that. All right, so back to our story about the US dollar. It is looking very heavy here, and so it doesn't shock me that given the US dollar's heaviness that we're seeing the gold market still continue to be relatively strong here over the short term. I'm actually really warming to this, sort of head and shoulders fractally kind of idea, although this shoulder doesn't really align that well with it. But I had drawn up just very simple objectives off of this a while ago. And interesting how this head and shoulders pattern literally takes us right up into this reload zone here up in this 1300 area. I suppose if and when Thomas comes back to the show, it'll be interesting to get a report from him. He said that some of the people that he likes to listen to were saying that algorithms were going to start buying gold here at 1279. I don't know about that. What I will say here is this is, just like the gold, the yen market we just looked at a moment ago. It's awfully tough to justify being a buyer up here. If anything, what I would probably like to see, that same sort of conversation we had about the yen a moment ago. If I was thinking about getting long here, I'd love to see like just a nice consolidation to set up a bullish bot setup to take us up top in earnest. I'm wondering whether, we're coming into sort of the end of this move here. A little bit of a trap being laid. I also noticed when I looked at the silver, it's right up at this sort of megaphone objective that we've talked about recently. I suppose its reload zones are up in this area up here. So, and we also, it looks like we have trendline confluence up here. So I could very easily see, I mean, again, I can't chase this. I just simply can't be a buyer. But if we did, if and where we do top out here, if I do want to be a buyer of silver, I got to sort of wait for the pullback. And, just same thing with the gold and the yen and stuff. If you are interested, I think it's a good idea to wait for some sort of consolidation in here to give you that sort of trend continuation trade. I mean, it's been a hell of a run, no doubt about it. I think we I can't remember if we got any signals on silver in particular, but I mean, I can understand people thinking this is a bull flag and taking that trade there. Sort of playing catch up with the gold market, I suppose. And, not a bad idea. We take a look at how the metals are operating. There's that buy signal there on the gold weekly trend. Again, I can't chase that, so any kind of pullbacks, and like I said, if I got a nice little bot consolidation here, that would make me happy. Silver weekly trend hasn't turned over just yet, but maybe with the inertia of the yen rallying there and the gold market still progressing higher, maybe that pulls the silver up, so that turns. It's interesting to see Professor of Economics shows very little signs of strength here this morning. And you could actually argue that a fail of this level here this morning was actually a double top breakdown here. So there is the high in the professor of economics right there. And, double top fails. If anything, we might even be seeing this is why, the US dollar's a weakening because people start to actually believe that, yeah, it sure looks like the US dollar or the US economy has sort of run out of steam here. And further interest rate increases are probably not in the cards. I personally like to follow the professor of economics as he really gives us a pretty good sort of guide as to what to expect going forward. And if we put up just a cute little trend line here, boobity boo, yeah, this is a pretty important failure area here. And it's actually cool to see how we dojied here. You can see the market dumped against that trend line. And then last week, the market said, okay, well, do I really want to be a bear? Do I really want to confirm this? Doji and the failure through the low here first thing this morning on this new weekly bar is sort of confirming that. So, 1, 2, 3 structural signals on other sides of trend lines. This sounds like a Leanne James. And if we pull down to the sort of lower time frame, there is that trend line. I might argue that traders, I doubt many of you are trading copper, but in fact, actually, I kind of like the failure up right up against the trend line here, but maybe that might be a half decent signal. Failure on the other side of trend line. Give me some sort of structure. And I wouldn't even be surprised if some guys were trading this. So off of the lower time frames. 1, 2, 3. Geez, sure got a lot of weakness in here. So it makes sense to me that the traders are like, okay, let's dump this thing. She's ready to go. I think probably the market that's caught my attention the most recently is this crazy crude oil market. This trend line goes back forever, like all the way back to the original cycle bottom back last century. And this is a pretty important failure here. Again, this is actually almost exactly like that copper, right? So they dumped it through the trend line. Do I really want to be a bear? Do I really want to be a bear? They brought it back. Do I really want to be a bear? Yep, I want to be a bear. I suppose off the dailies and stuff, we'll probably start getting into areas where you can see like dead cat bounces. I suppose you could argue that it might even be what that is right there. Boobity boo. Yep, 38.2 right on the nose. So this should be an interesting battle here for crude oil here going forward. And try and remember this is the old sort of expression that we use in the market. When I was a commodities broker, you buy your unleaded the middle of February. So where the hell's February? That's way over here. You sell it the middle of May. You made money 9 out of the past 10 years. So something tells me the seasonal bounce is going to look something like this. Who knows exactly what it's going to look like, but probably something along those lines. So let's keep an eye out for, W's and stuff like that. We also had on, one of our level 3ers is working through the options modules. And he found this TRISOF energy trade. This is a shale gas play. Hasn't really W'd yet here. It was interesting how this thing tried to W back here. But I'll keep an eye on this, sort of that same sort of seasonal play. Buy the middle of February, sell the middle of May. You made money 9 out of the past 10 years kind of thing. And I'm seriously considering just going and buying this call, just sort of a fun experiment. The only problem is Brian's a cheap ass, and I don't know whether I want to spend $1.20 for each option. That's 120 US dollars. I like to keep the bets nice and small in the TRISOF options plays, just because it's a lot of money that you're throwing at these things. So oil, it's fascinating. I'm sort of professor of economics. Oil is a classic leading indicator. I don't know. I look at these energy market, and it kind of makes sense why we're seeing over strength in things like the bond market right now, right? Energy, the trend is down, the trend is down, the trend is down. Coal even is down. It's interesting to watch the natural gases come right back down to our original bottoming area. And actually, if we look at a few of the natural gas stocks in a bit, you see that they're starting to look really interesting in interesting areas, but the trend is still technically up here. Uranium still looks extremely strong, not giving anything back. And, the uranium names look kind of interesting too here. So if you are interested in the stock market, I still think that this is the area that I want to be concentrating on. And I noticed that, where are we here? One of these screens, I had all my uranium. Here we are. So Cameco is sort of the big uranium stock, big uranium play. This is sort of the 200, 300-pound gorilla in the space. It's trying to turn back up here. Not really the best trade location. Very splotchy. I suppose if we had to see a bit more weakness in the energy space into sort of January, early February, yeah, you might see that come off here a little bit. But I noticed things like Denison. If you missed the last go round in the uranium space, they basically just brought the market right back down to the original bottom. So, in my opinion, this isn't a bad place to have some money working, and of course, I do. And it seems like that low 60 area the street seems to like that. And then I've got my crazy derivatives, the VCIM play that we're going to do in the uranium space, sitting basically where we bought it, basically two bits. And I think there's a lot of directors that are long from that level, so I don't mind that area. Our little uranium space aggregate company that supplies aggregates to the construction industry within the uranium space, it's up a good, 8-9 cents off of the buy level. Certainly wouldn't chase it here. But if you are interested, this is a very esoteric name, not exactly the kind of name I would be talking to the public too much about. Interesting area. Down in here, if you like the VCIM model. I was looking, speaking of the sort of gold sector, I was looking at the gold stocks again, and really the message hasn't changed for me here. I can't chase these markets as they've zoomed up. If anything, maybe we can get a bit of consolidation. And interesting enough, like Agnico Eagle's actually down on the day. So it's just a big hurry up and do nothing in the gold space. But as I had said recently, ironically enough, I actually think that the money to be made, again, can't chase this. If you're going to work a bid, great. Come in and try and play off of things like reload zones and gap fills and stuff. I think the trade on a stock like Alio, for example, is down here, just below $1. Don't know whether it's a good idea to be chasing that up top there. Well, we'll see what happens. Only time will tell. And remember, everybody, like Brian's a cheap ass, right? I want to be buying against the low ends of ranges. I even did that a couple times in the crypto space over the weekend, threw in some bids. Not going to chase up markets. We'll work bids against the bottom ends of ranges and just be patient. All right. I suppose we should talk stocks just for a little bit here. I did notice something jumping out at me again, and I really like this study. I think this is a pretty good tell of what to expect going forward. You can, as long as this area line is trending higher, that's actually not a good sign for sort of speculation in the market, because it means that investors are flocking, running into the big blue chips, the Dow stocks, all that kind of stuff, right? This is a spread between the Dow and the Russell 2000. You can see how the Dow's sort of bounced back here, but the Russell 2000, the small cap stocks are just, they're just still floundering. The bounce just wasn't there. So, and also too, if the Fed's talking about raising interest rates, well, that's going to hurt the small companies more than it hurts the big companies. And that's, in a weird sort of way, that's kind of what the goal of the Fed is to do. Excuse me, is to try and take out the sort of overt enthusiasm, euphoria in the economy by raising short-term interest rates, and it's to try and calm down the little part of the market, the venture part of the market. So, if we're all capitalists and we're like, hey, we want to, see growth and we want to see stock market move up, then what you want to see in this spread is a nice topping pattern and we breaking down, kind of like what you saw through this period here, right? And then this was a pretty good period for the stock market as that trend was heading lower. So as it stands right now, you can see a little bit of a top trying to come in here, but I don't think that this thing really stops in earnest until the Fed basically comes out and says, okay, we've done what we've had to do. We're going to go on pause now for the next little while, and then I think the stock market can start coming back in earnest. But as we sort of pointed out, and of course we all know markets like to go into economies like to go into recession in years that end in 8s, 9s, 0s, 1s, and 2s. And hello, we are leaving an 8 and entering a 9. So this is like basically the perfect sweet spot for a recession. And, half of the reason why you guys like crypto is we might actually find that crypto does better through the recession than the stock market. Stock market itself, and I don't know whether I've talked to you guys about this chart, but I just sort of leave it on here. I think it's a pretty good sort of walkthrough. The yellow here was Junior Bush's dot-com peak, his recession. The red here, this was Obama's housing market recession. And so just on a percentage basis, I overlaid them. What does our sort of future look like? I actually thought we were going to rally a little bit higher here on the stock market and top out in this range, but the market's going to top out where the market tops out. And you can start to see the technical damage is being done. The red line, like we said, that's Obama's recession. The yellow line, interestingly enough, the yellow line actually is a longer duration correction. And that .com top, you could argue that we're at the same sort of cycle pivot. So I wonder whether we have to go through this little bit lengthier correction here in equity prices to mark this sort of pivot of this cycle. And, like all the level oneers, this is exactly what we tried to teach you is, we're going through these long-term cycle pivots and we should head into a growth phase in the economy. But first, we got to get through this recession. First, they have to hit the reset button. And what does that recession look like? I'm thinking, just technically speaking, just rules of thumb. Usually in recessions, equity prices lose 50% of their value. So if we top out around 300, then odds are we'll probably have to bottom out around 150. And gee whiz, what a coincidence. The old breakout highs on the stock market are like 150 area. And reload zones just so happen to be off of that same area too, right? Really bad recession, we have to go all the way down to, say, 115, 120. Really a normal, typical recession, there's 50% off of the top right up in there. So, that's sort of the path that I'm thinking we have to follow for the next little while. It's going to be a tough slog in the stock market, that's for sure. And as I had sort of said, and I guess it kind of makes sense, right? Kind of like what we see in crypto. It shouldn't surprise us that as the market rolls over, we're going to be hearing more and more of this sort of FUD and, get out of the stock market, get out of the stock market. The irony of all of this, though, is that whatever the base is over the next 2 or 3 years, and really try and learn this, guys, because you're relatively young. You haven't been through these before. But, in the level 1 program, we talk about Mr. Joe Granville. And, I'm worried that the whole world just, starts to shit on the stock market and everything is perceived to be going to hell in a handbasket. I'm trying to find the chart, but I don't think I have it here. And actually, I wanted to talk to you guys about this too, so not a bad segue. What the hell is it? I think it's INE or IDU. I don't know. I can never remember. Anyway, Dow Jones Industrial. DIA. No, we don't want that one. DJI. Maybe this is it. Okay, that's what we got here. All right. Yeah. So this is kind of what I'm thinking is probably going to happen here. A lot of people came out and just became just insanely bearish of the stock market through this. It is interesting to see that this peak here was, yes, what is that high? 1,062, 1,067. And we came down here to 570, not quite 50%, but pretty close. And like the worst part about it is I think that a lot of people are going to be like, oh, it's the end of the world, it's the end of the world, right? And remember our story about Joe Granville, right? And his OBV indicator, everything rolling over here. And this is what came on the other side of that recession. Woohoo! So interestingly enough, guys, that's actually what I'm thinking, right? I don't know whether you can see the similarities, but that's what our next, 17 and a half years should look like. So get ready. The irony of it all is that, people are going to be really wrapped up in this world, but they don't realize what's coming down the pike. And of course, this takes a long time to play out. I sure hope I'm going to be with you guys and still interacting with you guys through this. But there should be a pretty big stock market rally coming. But first, like I said, we got to get through this recession. So that's sort of stock market talk. The Fed's basically doing its job. The interesting thing, if we look at the stock market on a shorter term basis, and we kind of see this in Bitcoin, it's done basically the same thing off a lower time frame chart here through the weekend. But believe it or not, I could, if the Fed comes out and says, all right, we're done raising interest rates, I could easily see the stock market rally to new highs here. So, just try and keep that sort of in the back of your mind. You can see how quickly the market can rally if it gets in good moods, right? Didn't we have something like an 800-point day or something like that a week or two ago? This market can come back very, very quickly. I don't know whether we make new highs. It's impossible to tell, but I really do like the idea of us hunting long setups down at this harmonic PRZ. And then, if we sort of zoom in on that image, no, I don't want to do that one just yet. Let's go back to here. What do I sort of see the stock market doing? Remember we talked about this RSI study breaking down. We anticipated that it would come back to this trend line resistance and then waffle around here, and then that'll sort of give us our tell. So the dead cat bounce is rallying back into 38.2, where that's what you should expect. And here we are coming into January 1st and January barometer. I do like the idea of January barometer, and that's sort of what this chart was about. And we'll keep us on this to see how it plays out. But in essence, there's an old adage that just simply says, as January goes, so goes the rest of the year. And it's interesting how last year we had a big run up, then meltdown. And in essence, that's sort of what the stock market did. So, technically speaking, this is a horrible place for us to be thinking about, buying. We should see some sort of dip against these lows. Notice this tail right here looks very suspicious. There's a whole bunch of trap bears in there. And then also, too, this was a V bottom off an intraday low. So this tail looks very suspicious. So I'm really thinking that, when this thing does roll over and, maybe we're even painting an inside bar today, we'll see, like I said, markets close tomorrow for the January 1st holiday. But when we come back the 2nd of September, it'll be really interesting to see how this plays out. And I kind of like the idea of the stock market rolling over here to begin this sort of year. We might not break to new lows. But like when I look at things like the bond market, remember we talked about a week or two ago about the bond market. The Japanese bond market has just taken off like a rocket here. Almost all of these bonds are actually in rally mode, which means that interest rates are falling. The only one that isn't in rally mode is the short-term interest rates. They're still falling, which means interest rates are rising. But you can see, remember we first got the signal out of like the middle of the curve, right? The 2s, the 5s, the 10s. And the last sort of piece that I was waiting for was, would these long bonds turn up? So, basically we got the whole damn yield curve rallying here now, except for the short end. And of course, that sort of brings us back to yield curve conversations, all right? So you can see the 10s now are in full rally mode. The 5s are in full rally mode. The 2s are in full rally mode. The yields are falling dramatically. We don't have to worry about inflation in the system, right? Because the energy market broke there. So the cost push component of inflation is just not there. And the last sort of piece of the puzzle here is, does the long bond, and now you can see there's an M coming in here on yields, does this thing start to play catch up with the shorter dated maturities? And of course, we've talked lots about this. When does a recession occur? And the single most powerful tool you can use to predict recessions is this thing called the yield curve. Where are my links? And this also should be a nice little tutorial on how to find these things on the site. For any new people that come into the site, most of our resources and stuff that I like to make reference to, I still have on my old 1980s website. But you should be able to find them here in the library. And you can see yield curve, U.S. dynamic yield curve. That's the first link right here in the trading utilities. So you can see, I mean, this is such a good lesson, right? Financial asset crisis, please, helicopter money, quantitative easing. There is the yield curve basically guaranteeing profits for the financial services industry. Then as the market comes back, right, still guaranteeing profits for the financial services industry. So that one part of the economy is going to grow. Then as the economy starts to come back, right, and things are stabilizing, stock prices are moving up, people are feeling a lot more comfortable, here comes the Fed starting to raise short-term interest rates. And I mean, it's really cool you can even play this, I think. Yeah, they got like a little animation here. And you can literally watch the curve flattening out here. I mean, this is great history lesson for you guys. And, we're getting pretty, whoops. You can see as we're coming right into today, that curve is getting flatter and flatter and flatter. And you can really watch the short end of the curve coming up here. Right? So I don't know where we are. There we are now. We're still technically normal, right? We haven't rolled over yet. And the key here will be, will these long-ended bond maturities, will they start to dip down? And here's sort of the dot-com peak, which started the junior Bush recession. And you can see inverted, right? Longer dated maturities have a higher yield lower yield than the shorter dated. This is George Bush's, no, I beg your pardon, this is Obama's housing market crisis. And you can see at one point the curve went inverted. Shorter dated maturities have higher yields than longer dated maturities. And you can see, the other side of this. So, the fact that the curve hasn't broken yet and is still actually pointed up, normal, means that I don't think we're quite there yet. And like I said, I wouldn't be surprised. Don't be shocked, guys, if you actually see this stock market come rallying right back up against the top end of the range here into the spring, summer. That really wouldn't surprise me one bit. And then, like I said just a moment ago, we can't really decide that the trend is turned back up until we see Mr. Barbecue's levels resolved. And if I'm not mistaken, Mr. Barbecue is sitting right up there. So, I could see some play in here. My hunch is if we get if we actually get like a trading buy signal, I think it actually comes in right off of this harmonic PRZ. I really do. So that's what I'm going to be looking forward in the stock market over the next, month or two. Politically, it is, it's fascinating to see how Mr. Trump is trying to leverage the U.S. Congress as hard as he can. And of course, he's using things like government shutdowns to try and get his way. I think that the Democrats in the U.S. Congress really have no interest in playing ball with him. So probably over the next month or two, it's going to be a lot of this political jockeying. It's going to be a real mess. But we'll see. The irony of it all is that Mr. Trump has basically brought the U.S. stock market to has brought the U.S. government to a grinding halt, all this shutdown and stuff, because he wants funding for a federally built wall. And yet he has like this little GoFundMe page working, and it's already raised, many, many millions of dollars to pay for the wall's construction privately. So ironically enough, he might just actually raise all the money he needs privately, and he'll go and build the wall without Congress at all. The irony of this crazy world is you cannot write better fiction than reality. I mean, you just can't. Okay, so I don't know whether that helps with your sort of bigger picture stock market participation. I think, if we're hunting trades, and we'll wait for Sjord's been working away. In fact, Sjord told me that Kevin, you and he are working on a screener. So we should, over the next weeks, start to see multiple different screener ideas coming up on the dashboard and in the screeners room. We've really sort of pressed Sjord. This is a major priority now. So, we've sort of, he's sick now and coming down with a cold. Isn't that interesting? Remember, I've been talking about General Electric recently as a TRI SOF plate, and now on the stock market, what am I presented with? A GE Davo signal. Go figure, right? But we should see more of this kind of data coming out. And actually, this is kind of cool. Actually, you know what? This isn't bad. Let's go take a look, and let's see what Sjord's got in store for us here. So we should be able to start seeing more of these screener ideas coming up here on the site. What do you think, guys? Can you see the W trying to come in here on GE? Should that surprise us? I don't know. Kevin sees it, I guess. Ooh, look at that. There's a cool picture of a Mandelbrot set. Will, can you see the W trying to come in on General Electric? it's it looks like some of these, Seward's got to work a little bit more on integrating this stuff. But I like to go through these kind of things and just peruse. What do we got here? Look at this beautiful little double bottom coming in here. And if I'm not mistaken, AutoNation's pretty popular stock. So that's something we should keep an eye on. Why don't we let's go because I think we have GE on here somewhere. Where is GE? I thought I had it over here. Maybe it's over here. Yeah. So it's interesting. We were talking TRI SOFs on GE. And what I often see this happen, guys, is the derivatives markets actually start flashing buy signals first. Prices have just gotten way too depressed. And so derivatives start looking very attractive. The derivatives markets look so attractive that the Wall Street guys start coming in saying, okay, well, you know what? Let's start taking some positions. And in a weird sort of way, it becomes like this sort of self-fulfilling prophecy. The derivatives are so cheap that Wall Street can't ignore them. And that injects buying. And then all of a sudden, mysteriously, somebody will come out with some sort of research report that, hey, maybe this thing isn't so bad. And a counter trend rally is manufactured. Seen that happen so many times in the market, it's ridiculous. So if anything, this is really cool, especially news site members. Go back and watch daily briefs from like a week or two ago, how we were talking about how the derivatives markets were starting to spit up buy signals in General Electric. And now the screener is starting to sort of validate that thinking. Technically, bottoms are starting to come in. Okay, so what was we had a couple names to chew on there, right? So we had that AutoNation. And one thing I absolutely love and I'd like to see more of going forward, and what should happen here is we have the screener data that just spits up ideas for us. And then, I spend a good chunk of the daily brief just simply going through and just vetting these ideas out. Just because the algorithms tell you certain things are happening, it's always a good idea just to go and look at the chart and just sort of, like we used to use the old expression, go kick the tires. Does this trade actually make any sense? A lot of these ones that have just done violent V bottoms, I don't know whether it really, maybe the indicators are giving you W's, but is this really the best trade location? I don't know. So, like I said, I'm a fan of just simply pulling up the charts and just sort of validating what you're seeing off of the screener information. So, there is the AutoNation chart. What do you think? Who can we pick on now? There's kind of a cool picture there. Andres looks like he's looking through an unending spiral. Do you see how, from a speculative perspective, and I'm just curious, Andres, maybe you know this, maybe you don't. What is sort of our time-tested rule, and maybe somebody can help him out if he doesn't know. What is our time-tested rule for painting price targets? Is there some sort of level that we like to use that's just time-tested? Bearded Nerf Herder comes in with the answer. So, Andre, I don't know. I maybe you're relatively new to the site, and I apologize for putting you on the spot there, but it's just sort of what I do. But we use the 50% rule as a nice time-tested target. And Andres, are you even here? Maybe I'm just talking to myself. Maybe who else should we pick on? I suppose Albert. Why don't we pick on Albert today? Albert, does it make sense? Can you start seeing confluence of ideas? I see the 50% rule. And Albert, you just did level 2. What do we call this big node right here on the volume profile? There's something, the POC. That's right. They call this the point of control. So not only do we have a natural level for prices to trade back to, the 50% rule, but we also have, this is basically where the street, most of the people on this street are actually long or short this stock, which is kind of ironic, eh? And you often see this, whether it be crypto or whether it be stock market or commodities markets. This down move was actually on relatively light volume. A little bit of activity here. I think the street kind of was hoping that the bull would sort of regain its power, but you can even see the sort of meltdown down here. The volume is getting lighter and lighter and lighter. There just really isn't that many people participating here. Are we looking for new 52-week highs on a trade here? No, I don't think that's a good idea. But is it realistic to look for the market to bounce back to the 50% level? Sure. I think we can also make the argument horizontal support and resistance. This looks like a pretty important level right up there. And also, too, we like to call this a notch on the profile. There's a little bit of a hole on the profile here. I think it's gonna be a tough slog if the market can actually accept back above the POC. The POC will probably act as pretty stiff resistance. But you can make the argument there's a pretty darn big notch right in here, right? All this area of the profile. Keep in mind the profile would ideally like to look like a big parabola, like so. So that means that all of this area needs to be filled in. And probably this area up here. You can see where value high is. It's all the way up there. And actually, we have an old rule in the market. You can see where value low is. It's all the way down here. And that makes sense too, right? Remember we said horizontal support and resistance. That's a key level. That's a key level. Probably that's a key level right in there, especially off of those fail levels, right? So you can see how the market is painting upside objectives here. And, maybe we spend the next 6-8 months, working our way back up into this level. And then it would be at this point that we'd start looking for this sort of ME type action for the next wave down. So I do like the fact that the screener is spitting up these kind of ideas. And I don't know, does anybody see any letters of the alphabet here that maybe we might be interested in as technicians? If I change this to a line chart, maybe you'll see them a little bit better. Boom. What does this look like? All right, there. That's a nice W, eh? Rucker, Jonas. Hey, you guys are knocking it. Andres, are you still here with us? Maybe I'll go pick on somebody over on YouTube. Where's the YouTubers? Hey, there you are. Mr. Tim. Daniel's in Hawaii. Hey, Daniel, you should probably reach out to Zach on the site. He's in Hawaii. And he might actually be, show you a good time. So I just see you over there on YouTube, Daniel, and you mentioned that you're in Hawaii. So I asked Tim if he could post something on the year of the pig, and he said already posted it in the lounge. So, I'm in the daily brief room. Let's go see if Tim posted something. Hey, there we go. Oh, cool. So I love these kind of things, and in a weird sort of way, it's quite remarkable how these actually play out. But and by all means, Wikipedia, if you can help them out, feel free. The pig is the 12th of the 12-year cycle of animals. Okay. Sexagenary cycle? Oh, man. Every 12th year corresponds to high and is commonly called the year of the pig. There are 5 different types of pigs. Metal, water, wood, fire, and earth. In Japanese, it is the boar. Interesting. Last Empire called it a great meeting. Other citizens called it a great meeting. I was about to leave Earth. The pig came in last. Legend has it the Emperor was about to call it a day, and Oink and Squill were served a little pig. The term lazy pig. Got hungry during the race. Probably stopped for the feast and then fell asleep. The race there was the 12th and the last animal. All right, well, that was fun. What does it imply? Month of the pig, hour of the pig. All right, well, for fun, if you want to go through and read up on what to expect out of the year of the pig. I know some of the Chinese zodiacs actually imply, yeah, exactly. That's what we want to know, right? Is it implying an up market or a down market? I'm not quite sure. Maybe, what do we say? The bulls make money, the bears make money. What happens to those pigs? maybe maybe that's a premonition. And the interesting thing, of course, and we should probably get on to that now. I've been talking way too much here. But I suppose you could make the argument that what we just saw happen in crypto could very easily happen in the stock market this year. And like we look at things like the bonds, man, these bonds are just on fire here, right? Just rallying strongly. That generally is not a good sign for the economy, right? Remember inverted yield curve and all that kind of stuff. But what I wanted to point out was where is the Chinese? It's around here somewhere. Chinese stock market? Yeah, I mean the Chinese, oh boy, they are just on their knees right now. Remember we talked about professor of economics, right? We're actually seeing very similar price action out of China and professor of economics. So I don't know, maybe the Chinese zodiac is sort of telling us year of the pig, be careful. I suppose you could make an argument that I don't know where you would start this from. I mean, if we do the whole range, boobity boo, we could see Chinese stocks come all the way down into this area here. It wouldn't be shocking. And actually, it was really interesting through the this last economic downturn. I did a whole. All right, Happy New Year, Albert. Oh, and he's gone. I did a whole sort of piece on the Chinese market and how I felt like it was being manipulated by Mr. Soros to try and get cheap prices to buy. And sure enough, that was through this window here and then this window here. Basically, they're just backing it up into buying zones. So maybe we're going to see the same thing where, the smart money wants to be long from this level down here. How do we get that to happen? Maybe we inject some crazy, diplomatic foot into the environment and just bring the whole economy to a grinding halt. So, I don't know, a year of the pig. I get the funny feeling that if we did our research, we'd probably find that it's probably not a very optimistic outlook for the stock market. All right. So, I still really do like the idea of Bitcoin itself being like an ultimate leading indicator. There, like given the fact that there just isn't that many sort of growth engines in the world right now, millennial generation coming online, I think you can make an argument that that could be a growth engine. And of course, the millennial generation, I've had the privilege to hang out with you guys over the past 4 or 5 years, and you guys are super bullish on crypto. So does it surprise me that crypto is a leading indicator in this space? Doesn't surprise me one bit. Jesus, look at these bonds just taking off here. Isn't this interesting to watch? Like the bond futures are rallying, but the ETF, somebody does not want this thing to go up here. That's fascinating. I mean, based on what I'm seeing here out of the bonds and seeing what's happening in the actual yield curve itself, this TLT should be way higher. So somebody is and this is fascinating because somebody is clearly sitting on this market here. Somebody does not want this thing to go up here, even though the market itself is pressing higher. And if anything, you know what? This is an excellent conversation on our Leanne James. Remember we did that conversation about what does the bond market look like going forward. And we had that trend line breakout, and we said, okay, well, if you're going to trade the W, you got to buy the W and risk against the lows. And look how this bond market has just chugged its way higher here, right? Remarkable. So hats off to all those that did play the bond market. I bought my calls here. What an idiot. Should have been buying here. But anyway, still got it on the books. We'll let that option just do its thing. I'm underwater on it right now, but we'll see what happens. I was going to just point out that if we did want to look at trades like this, and we wanted to use the bot trading system, and we put up bot trade levels. Oh, of course, it's over here. I think it looks something along these lines. So, yeah, isn't that interesting? Look how 25 level basically set up off the double bottom there. Move stop to scratch, move stop to trailing. I think at worst, maybe you have your stop below here. I suppose, move stop to trailing. We could start justifying moving stops to here underneath these lows. But I think if you had taken this bond long trade here, I think you have no choice but to make money here. And I wouldn't be surprised if this target's hit. Seems very realistic. Okay, so heading over to crypto. Remember, I spent like an hour or 2 hours yesterday talking crypto. So by all means, you want to know what I'm thinking in crypto. Probably not a bad idea to watch that broiler chicken show. Still think that we're playing out very much. These were the fear cycle proxies. And wow, did they have a lot of money pour into them? Very normal. This is the gold and silver from the 1980 bull. And that cycle, I think gold and silver were the darlings. I am seeing a lot of similarities in sort of, dumps into point C's, then counter trend rallies. If we look at the gold market, I think we can make the argument, maybe we have to go all the way off of that high. I'm not quite sure. And I bet you that Andres guys didn't expect Brian to be blabbing away here as long as he is. But oh well. There's a 50% level of that correction there. So if we use, I don't know whether we have to use that one or that one. I think we might have to use that one for similarities. That would be all the way up there. So that would take us back into this original sort of failure level. Remember, in fact, actually in the broiler chicken show, we talked about that yesterday. That was basically that 38.2 failure level right there. So, nice little counter trend rally back against all these highs. I think that's totally realistic. I think that's like, 8, 9, 10,000 on Bitcoin. And then silver, and then looking at the ETH, I do like the idea of a nice rally back into sort of, this traffic area here on Bitcoin, this traffic area here on silver. We only got 50% out of that, though. And so if we do the same sort of logic on Ethereum, basically that's painting this traffic area from back, basically in the summer. I think a nice counter trend rally, seasonal bounce would make perfect sense here. Yeah, I think so. I don't mind that idea. And actually, one thing that kind of jumped out at me yesterday when I was doing the show, which it surprised me a little bit, was let's see. I think it was this one. When I actually counted the number of bars from the 2014 peak to its ultimate trough, it came out to 264 bars or 364 bars. And of course, 365 days, right, in a calendar year. So basically exactly 1 year. So from this 2018 rally peak, exactly 1 year, ironically enough, took us to almost exactly that dumping point there a little while ago, right? Look how close that is. It's almost exactly right on. So last cycle, the bottom came in a little bit earlier, but of course that makes sense because the top came in a little bit earlier. Maybe this was the ultimate bottom. I don't know. My hunch is no, but that's just Brian's opinion. You know what I think about people's opinions. What I'd really like to see, and like I said, dead cat bounces. We look at the gold and silver from 1980. Maybe we rally back up into this area, and then we're going to have to come back down and test these lows. And maybe that's what this trading range has to look like over the next year. That could totally be possible. Where we, 7, 8,000, whatever, as an upside, and 2,000-3,000 as a downside. What's interesting is, through this dump here, they actually cleaned out these lows, but they never took out the ultimate low here. So, maybe we're in for something along these lines. And interesting too, if I draw this trend line off of just this level, notice how that would basically bring the market right back. You can see how the market lost that trend line and dumped hard. Maybe what we do is we rally back and play with that trend line from the other side. That could be totally possible. I think I've said this recently. That's cool. So John Brooks here says ETH is almost perfectly symmetrical from low to high to current low, 320 bars each side. Excellent. And it's funny. Yesterday I wanted to talk about Ethereum in the Broiler Chicken show. I even said, "Oh yeah, we'll talk about this later on," but I never got around to it. So, this is an okay transition into crypto. We sort of slowly. The only other thing I wanted to mention before we jump into crypto too hard here was I still think that crypto, to a certain degree, might be like our ultimate leading indicator for this economy. And if crypto can actually find a bottom here and actually start rallying back up against resistance and start breaking previous highs, then maybe that's what sort of puts the bottom in the semiconductors. They start moving back up. You can clearly see, like as an old gnarly technician, we should all look at this semiconductor chart, and all of you should tell me exactly where this market's going. Maybe what I need to do is put Sen's gap script. Well, actually, Jonas, I would disagree. The public looks at this and they think down. But I would actually make an argument that, it's awfully tough right in this area, but I don't mind the idea of, key support, key resistance, key support. We're awfully close to those levels, eh? But did you notice, Jonas? And have you done the level 2 yet? Maybe not. But we have this simple rule in the market: gaps like to be filled in. This is a weekly price chart. Do you see this gap on the weekly price chart? That cannot be left open. And interestingly enough, there's probably a shitload of stop loss orders just sitting right on the other side of this level right now. So, I suppose you could argue if we just draw a simple trend line. Can you see, Jonas? This sort of the trade setting itself up. And, who can finish this line? You buy when it snows. Jing, 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 jing. And hey, thank you, Rocker. And you sell when it goes. Right? April, May, June. And then if we do like Fibonacci's. Hello. See how that's all starting to line up now? For new people to the site, we like to follow this level religiously, and we like to call it Mountain Man level. My hunch is this market has a date with Mountain Man. But there is no bullet. Yeah, totally. I mean, do we have a buy signal here just yet? No. And if anything, what we really want to see, and remember we talked about that just a little bit ago. What we really want to see is we want to see the W's come in. As we go through this sort of January barometer, first few weeks, first month of the calendar year, they're going to form some sort of tradable bottom. But remember, like we talked about with General Electric and derivatives information, you can start to see that the derivatives guys are saying, look, this has gone too far down. You have to start thinking about technical bounces. And, maybe if you want to stick around, Jonas, to the level 3, we'll teach you about the derivatives information. And actually, it'd be kind of fun. I want to do this just before we leave today. And I'm just having fun here. I don't know. Are you guys enjoying this? Should I keep going here or should I wind this up? I don't know. Hope you guys are enjoying my rants. I see we lost a couple people that were like, Brian, I think I've had enough listening to your garbage. Yeah, Josh. Once you understand the TRI-SOF, Josh, I think you're going to be a monster out there in the stock market. And I suppose you could actually make the argument that crypto has got, Bitcoin options have got SOF starting to form. And that was a big assignment for current level 3ers was to hunt for those SOFs on things like Durabit site. But just for fun, let's just go see what this option looks like. So our target is, and really it should be 52-week range, so that's not bad, right? You can see that's January of last year, so that's basically your 52-week range. 47.5 is the target, so let's pop on over to the library. Let's all go to the library. No, that's not how it goes. Maybe, I don't know, do people even go to movies anymore? All right, where is the library? I'm going to put that away. It's NYE, probably poop to do, lot, not you. Okay. Where is our, actually, I even think I have it here, derivatives. There we go. All right, what did we say this was? This is AN, AutoNation. AN, submit. And why don't we look out into July? Oh, that looks like a nice month. And we said the target was 47.5. So I'm kind of thinking I'd like to see like a 45 call, right? There's 45 right in there. Let's make that nice and big. And I'd like to see that. And, if you've never seen the TRI-SOF, what it just simply says is, if we go and buy the $45 call and the market hits 47.56, our technical objective, what will this 45 call be worth? What would be the intrinsic value of that option? And what is intrinsic value? Intrinsic value is simply the strike price of your option minus whatever the current market price is, right? And we're expecting the market price to be 47.56. So that means if we go and buy this $45 call, then the intrinsic value of this option at our target should be 47.56 minus 45, or basically $2.56. Does that make sense, guys? It's pretty, ironically enough, to make money in the market, you actually want to try and dumb it down as simple as possible. So hopefully that just makes sense. That's a very, very simple illustration of what this call option will be worth if the market trades to 47.56. We can type in here at objective option will have $2.56 of intrinsic value. Now, ideally, I want to make a 2-to-1. I want to double my money. So that means that I can spend an absolute maximum on this option of basically 50% of whatever this number is. So 50% of 256 sounds to be like about $1.25, right? $1.28. So we can write here, I can spend a max of $1.28 on this call, with the anticipation that I'm going to double my money. So let's go see what these options are trading at. All right, where is that sheet? Here we are. So I like to buy a good 6 months of time. Why? Because W.D. Gann basically said, and it's sort of one of his key principles, and it's the whole premise behind this 50% rule trade, is, if we use a 52-week range, then the market should bounce 50% of that 52-week range, and it should do it in about 50% of the time. So in essence, what our thesis here is basically going to say is, there is a calendar year, and keep in mind this is the stock market, so it's closed weekends and holidays. I'm going to simply break that in half, right? About 100 and what is that? About 110, 115, somewhere in that area, right? Oops, silly. Right, something like that. So I'm going to anticipate that this 50% level is hit within 6 months. Way out into here. So there is June, right? And so that's why we want to go and buy 6-month options. And in this particular case, this is the Julys. So we go look at $45 calls, and oh, isn't that interesting? They're sitting, looks like the last trade is bid 65, offered $1. Looks like there's some money to be made there, right? What do you think, guys? And does anybody else see this? I don't know. So, I don't know whether you want to pay $1, but, I'm more than happy to maybe join the bid there at 60, 70 cents. Maybe even up this bid to like 80 cents so you can make sure to get a fill. I don't know, I hate when I'm not overly impressed with these bureaucratic websites. I hate when you have to do this kind of stuff because it never works. But anyway, what I wanted to do was copy that whole thing there. But the long and short of it here, and actually I really don't like the way that they've done this. I like the fact that they have the deltas and the gammas and the implied volatilities here. I love that. But it would be nice if they just went back to the old, they gave you the option to go back to the old, because I don't like the way this is. Yeah, this is frustrating. Anyway, it's here and there. The point here is that they're sitting at about 65 cents. So again, we're getting anecdotal evidence that the derivatives boys are saying, hey, you know what? This is actually getting pretty compelling. 65 bid to $1 offered. Maybe I'll just do like that. Whoops. So let's see how this does. And actually, I like how this is. I like how this is working out here. I really like. Here, why don't we put? I really like how we can pop on over to the screener and come up with ideas, and then pop on over to the derivatives markets to see whether what we're seeing from the screeners is actually being validated. And I also like too, and this is just cheap ass Brian, right? If I can go and buy like, 3 of these things at 80 cents, right? That's going to cost me $250. I can sell 2 at, if I pay 80 cents, I'll throw 2 up at like $1.60, double my purchase price. So I'll get back, if that gets filled on 2 of them, I'll get back $320, $330. So I actually get a nice little 10, 20% return on my investment. And then should this thing ratchet its way up into the ultimate objective, then that third one is just a freebie, and, I knock the cover off the ball on the trade. So, actually that was a really cool little exercise we did there. And now we actually have a new idea to add to our watch list. So it's interesting, right? We've got one sort of, consumer retail name in this AutoNation. We've got one energy play in the shale business. And we have one heavy industrial play in the economy. I actually like that spread because then that way, you're exposed to multiple parts of the economy. So, yeah, I really like that. Not bad. All right, that was kind of fun. Okay, let's head back on over to crypto. Sorry, guys, didn't mean to derail. We'll just do a really quick sort of overview on what I see. Nothing really has changed dramatically here. I just got to find the right darn screen. Not that one. I guess it was over here, right? Yeah. Okay, once upon a time, we're still going through the hangover. Yuck. Nothing's really changed here. I wonder whether that was the capitulation low. I still think that we're in this phase and we got one more big dump to go. But hey, hopefully I'm wrong. I think as we said in the show yesterday, big fat cats who were shorting on CME. They publicly came out and said that they were covering their shorts down in here. And frankly speaking, I would say the lion's share of this short trade is done. Same thing I said to you guys before. I think we're far closer to the bottom than the top, but this might take, kind of like 2015. This might take a little while for it to actually finish going down, going sideways, and we actually start to see some appreciation in these prices. And, one might argue, kind of like what we just saw when I did those sort of, 50% bounces on Ethereum and Bitcoin and stuff, looking at the gold and the silver. This move here was almost an absolute textbook mountain man trade. And I don't know, does anybody remember what this event was? Let's see if any of it, I don't know whether any of you were around back then. Does anybody know what this event was? I don't think any of you guys are. Auction. Okay, well that's good. Yeah, this was the first U.S. government auction of Bitcoins. The Silk Road, the Sea Silk Road coins was right here, and this was the second one. So this actually, through all this, Rect, Mount Gox, Bitcoin's a scam, blah, 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 blah. We finished the dump. And like I've always said, Bitcoin really can't end a move without some sort of horrendous blow off top or bottom. Maybe that fall from 6,000 down to sub 3,000 was it. I don't know. But what we probably have to see is some sort of period like this. And then by the time we actually got to this event, people had forgotten about this stuff, and they were all talking about, oh my God, what's the price that people are going to pay for this auction? And you can see how they put a bottom into the market ahead of that auction. And we used to tell people that, this is when the public is starting to get interested in Bitcoin again. So is the public going to be afforded the opportunity to buy cheap Bitcoins? No. Heading into that fundamental event, which sort of brings Bitcoin back to the public's attention, this is where the bottom was, and all of this rally was these guys going long here into that fundamental event window. I think probably, we're nowhere near that kind of conversation, and we probably won't be for the next year. But what we'll have to watch is how does the market act on the other side of this event. And so off of this low, you'll notice that this was also a mountain man from the other side. And this was sort of the tell that the bear market was over. We put in the W, we break out. Have you guys ever heard me talk about Wyckoff, right? You could argue this is accumulation, this is breakout, and this is the check of the accumulation level. So this is a really, really important event. And then, of course, we went sideways again, breakout, and notice they checked the market again. Very typical Wyckoff sort of markup process. So that's sort of what I'm expecting down the road. But unfortunately, I think we're still sort of in this phase right here. Keep our fingers crossed. Maybe this was the lows, but we're going to have to go through this kind of back and forth for a while in this trading range to establish a base. That's what I think has to happen. But I guess what I wanted to mention, that what really sort of jumps out at me when I look at this chart is this is sort of that rally that I think we talked about just a moment ago when we looked at over here somewhere. Just give me a second. I have to find it. Nope. It's one of these. There it is. All right. It's the one that doesn't have a title on it. Well, the 61% bounce, right, I think is basically this rally. Boom. And boom. And we should go boom up into here and boom up into here. Do we top out at exactly 50%? I don't know. But my hunch is that's what that 61% rally is going to look like. But it's down the road. Yeah. Oh, yeah. I'll probably, and, you want to keep it really easy on yourself, higher time frames. What is the trend? The trend is your friend, blah, 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 blah. As long as, oh, crap. I think that was the chart I wanted. I hate when I do that. As long as, oh, no, it wasn't. Damn it. What the hell was that? It's around here somewhere. Oh, maybe I've lost it. Damn. There it is. As long as this is painting red, I don't think there's a big hurry here. I do know there was a couple people that are kind of like, Brian, when are we going to start putting money back into crypto? Well, as long as this looks like this, I don't think there's a heck of a lot to do. We already have a lot of money in crypto. Probably, well, I mean, it was in the hundreds of thousands when the market was inflated. Now it's probably in the 50 to 100,000 area. And we have capital on Max. We have capital on OKCoin. So if we want to trade setups, there's lots to do there. Do I want to commit new capital to this space? I'm very simply put, no. I'm just going to leave it at that. Give me this consolidation. Give me the breakout. And then, like we said, this was Mountain Man tag up here. I don't know that we can get up that high, but probably something like into there, against those highs there. Then we roll back, check these levels, right? And now we can start thinking about, okay, what's the trend going to look like going forward? And then we get into things like Litecoin halvening and then Bitcoin halvening and stuff. And we'll have completely forgotten about this market. Right now, we're still trapped in this market state, and we have to sort of let this play out. It's a pain in the ass, I know. But we have to let this play out, bottom, and then we can start heading into the next bull cycle. Yeah, and that's the irony of trading, right? Is often the hardest trade is the one that makes sense. And the trade right now is just not to get too excited. Sucks, but that's just the way it goes. Interestingly enough, and I've heard lots of people talk about this, I wouldn't be surprised if Bitcoin and gold actually have to trade back to parity. Does that mean that gold has to play catch up? Does that mean Bitcoin has to cool down a little bit? I don't know, but I wouldn't be surprised to see Bitcoin and gold have to trade back to parity again. Okay, so that's sort of higher time frame conversation. I hope you guys are enjoying this. Give you a bit of value to work with here. It's always tough for me to know whether my rants are helping or hurting you guys. I hope they're helping. All right, I wanted to leave off today. Actually, yeah, well, not leave off. A couple other things I want to talk to you about. So, what I find really interesting is, all right, you heading out, Casey? It's about 10:30. I've been blabbing for about an hour and a half here now. But what I find really interesting is that Ethereum really seems to like to bottom into the end of the year. It hasn't been around that long, so obviously we don't have a lot of data to work with. Where is the start of this? One of these charts says the beginning of it. Well, I don't know which one it is. I think that's the recent one. This happens to be on Bitfinex. Oh, these are 4-hour charts. That's why. All right. So this thing started back in July of June 2016. And as I said just a moment ago, it's quite interesting to watch how this thing bottoms into the end of the year. It seems almost cliche. So as we sort of go through year after year, and I've talked to you guys at length about this. What year is this? 2016? Is that the same year? Maybe I have on the same data. Darn, screwed that up. But here is December 2016. Big dump into the beginning of the month. Rally away from those highs. Tax loss selling window. And so as a result, anybody who's actually selling at a tax loss, they're selling into stronger hands here. I see this so often, it's ridiculous. You could argue same sort of thing. This is 2018. This is 2000. I guess that's the same one. Let's go back. Or not. September. That's just this past year, right? Yeah. All right, so here is December of last year. Obviously, last year is a little bit of an anomaly, but nonetheless, same sort of logic. Dump into the beginning of, this happened to be November, but there's another dump, December 7th. Rally away from those lows. tax loss selling season. I got to sell this stuff, got to square the books. You'll notice that that dump basically is dumping right into strong hands. And you can see what happened. Woohoo! And so that's 2018 there. 2017 there. This should be 2016 then. So where's 2016? All right, that's this. But actually, that's what we talked about here, right? So dump into, December, rally away, consolidation, breakout. So, here you can, this is over the past 3 years, because I don't think we don't go back any further than that. So really, that's the study so far. But I've noticed year after year, the same thing seems to happen. And this is what I kind of wanted to talk to the public about. It's quite remarkable how cliche this is. And in a weird sort of way, I actually think that crypto is extremely cliche. So, if this stuff is pretty cliche, then what are the odds of things like Litecoin rallying into its halving event? I think they're pretty good, I don't know whether this goes far enough back or not. Nope. This is just the stupidity of the bull. I wonder what, probably Phoenix has lots of data. Oh, Phoenix. All right. So here was Litecoin's last halving. Right there here. And this is sort of what actually changes the record and changes sort of the basic message of crypto, right? Right now it's wrecked, it's all scam, SEC, blah, 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 blah. At some point, the bear plays itself out and, that becomes old news. And we actually transition into, okay, this is this news cycle. And, we know that we've got this Litecoin halving coming up in I guess the summer, right around our TRI meetup there at the end of July. Also notice too here that Litecoin dumped into the beginning of the year to ultimately form its base through that, and then here was our rally. So this is, considering that ETH has done exactly the same thing that was expected the past 3 years in a row. Bitcoin and Litecoin, and I don't know about the other coins, but I'm sure we could probably find lots of information. They're going to have their rallies into their halving events. So really, that's what probably the next catalyst that I think changes sort of the crypto story here over the short term. Also, too, Mr. Lee talked a little bit about how he liked $20 as a base. Well, here we are. You can also see, too, we're back into value. So you can't make the argument you're buying fluff. And do you guys remember, actually, this is an interesting image, right? Because you can see that right now, if we go through the process of bottoming over the next, say, 6 months, right, you can see that all that's going to do is just basically fill the profile in. Could we have a dump against this POC here and then rally back up? Sure. But the long and short of it here, again, does it make sense, guys? We're way closer to the bottom than we are the top. Does that make sense? Jonas, does that make sense to you? So I think I'll leave off the conversation with today. Congratulations. You made it through all this. Horrible. In fact, I might even argue that this is actually not in crypto's best interest to see this happen in the marketplace. And, unfortunately, get rich quick, and then public comes in thinking they're going to get rich quick. And, unfortunately, this is what they're faced with. So congratulations on making it through all this mess. I thought it was really interesting, and we're going to try and do some interviews with some of the older sort of OGs that went through the Litecoin mess last cycle. Well, I mean, Litecoin, I don't know, maybe Litecoin, but definitely the story I wanted to finish off with was when I used to do the Coinigy shows with the Coinigy boys. We used to have fun with Rob, Will's partner, in that, just as a classic noob, he went and bought his Litecoin at $30 a coin, right up in here. And, for about a year or two, when we had him on the call, we used to sort of tease him about, well, there's Rob sitting up there. Will Rob ever see his price traded to again? Maybe. But he's got to be damn patient, right? So ironically enough, we've basically just done exactly the same thing. Like I sort of said, congratulations on getting through the shit. We're probably in this kind of phase right now in the market. So we're still not at the pound the table, everybody, we're going to make money, rah, rah, rah. This is a no-brainer, right? Bull market, little old ladies, just get in there and nibble against bottom ends of ranges. We're not quite there yet. No-brainer stuff. But I definitely think we're far closer to the bottom than we are the top. So like I said before, congratulations on making it through this crap. And if we fast forward, what I'm kind of thinking is nice little consolidation in here to set up our next, halvening event rally, which should probably happen somewhere in this area right up in here. So if anything, what we'd love to see is just nice sideways and then rally. So, okay, I think I'm going to stop talking. I've been going for about an hour and a half, an hour and 45 minutes here. I hope you guys enjoyed the presentation. I got some good value out of watching the video here today. If you have any questions, always feel free to reach out to me. And welcome to the site, all new people. Let's all work as a community to help the new people out. Just get pointed in a good direction and all that, and get set up for the new school term coming up here in the next few weeks. Okay, guys, have yourselves a great day. Play from a position of strength. Of course, it is New Year's Eve tonight, so obviously that's probably the most important thing on everybody's mind. So have a good New Year's. Kiss your honey and make a wish for a better and more prosperous 2019. Let's all fully understand stock market is extremely dangerous right now. I do like the idea of counter trend rallies into the spring, and you could argue crypto, probably same sort of thing. Let's build a base here through the winter to have a nice little halvening event rally into the summer with Charlie. And we should see the alts as well. If he gets into a happier mode, we'll probably see that a lot of the alts are back into rally mode. So, okay, guys, have yourselves a great day. Happy New Year's. All the best, and bye for now.